time for stock picks. Today we are looking at three global counters: tech company HP Inc., automotive manufacturer General Motors, and e-commerce leader Alibaba. Joining us as we analyze these stocks is Timothy Kiarie from Scope Markets Africa. Timothy, thanks so much for your time this afternoon. And let's start with HP, a tech counter we don't really hear about. Take me through why you're seeing value in that stock.
Yeah, thank you so much for having me in the show today. And yeah, HP Inc. is one company that it's not really talked about. But when you really look at it in terms of intrinsic value versus the market value, we see the company being undervalued, and therefore giving us a very good opportunity. For instance, we are talking about the intrinsic value right now is about $49.11. Whereas the current market is about $28.61. So that shows quite an undervaluation of about 42%, and therefore combined with other metrics like maybe the strong financial metrics, hedge fund sentiment, among other things like maybe even the technicals, therefore becomes quite an enticing stock to recommend, or basically to look at.
And I was looking at the recent earnings. You mentioned that the financials were good. Yes, I saw that, but the outlook was grim. And this, of course, on the back of Trump's tariffs. The group also increased production in Thailand, India, and Mexico as it reduces production lines in China. What have you made of that, considering that Trump has already started signaling out companies that are moving their production lines away from China into countries like India? For example, Apple has been under fire for this.
Yeah, you see, when you look at HP, basically this company deals with the hard software, and when to arrive at a decision whether maybe probably a good company to look at, you look at different things, especially the three financial statements. That is the income statement, the cash flow, and the balance sheet. So when you do a combination of them, and then you add in the technicals. For instance, if you look at maybe probably the revenue, you don't. We are not just looking at what was actually what was the previous earnings. We are looking at like maybe you begin from 2022, 2023. You see how the company has been performing, and if you look at that, we see quite good metrics, because in 2021 it was about 63 million. That is the total revenue. When you look at 2023, it was about 53. About the Trump effect, basically, for me, this is a bit temporal, because a good example is if you look at maybe probably the indices, they were all in the red, but right now, year to date, we are seeing the likes of S&P 500 being about 0.5% year to date. So this is maybe probably an instance of whereby we talk about buying the dip.
Yeah. Okay, then let's move over to your next counter. The company you've picked here is automotive player General Motors. Another company, I guess, that could be, you know, feeling the impact of those Trump tariffs, particularly the ones where it comes to the tariffs hit on Mexico and Canada, considering most of the cars are from there coming into the US. Talk me through why you're seeing value in that counter.
Yeah, when we look at GM, that is General Motors, again, I'll begin by saying it's a bit, when you look at the valuation metrics, it's a bit undervalued. And there is the Insider Monkeys list. If you look at the Insider Monkeys list, which lists basically some of the undervalued company, about 16 of them, we see GM listed, I think being the sixth one. And the PE, the forward price earning ratio, is below the market average of 21.66 times. So for me, it looks quite good, even though we are looking at it being affected so much by the Trump tariffs, especially the bill that passed last week about it's called about affecting the EVs, and we are yet to see much of that, because if you look at how the stock performed during that day, we didn't have that much dip, because it's something again that is yet to debate in terms of how this gonna happen. And I also, the management talking about probably looking at a way of to repricing their product offering, basically to counter the same.
And I wanted to ask you about the its value proposition within the EV space. That's been proving to be a very competitive space, and a space that's also dominated by the Chinese players.
Yeah, it's quite a bit significant, the EV space, when you look at it in terms of the EV space. But again, for me, like basically how I do my stock pick, I don't only look at the fundamentals alone. I also combine with other metrics. For instance, I maybe probably looking at the technicals bit of it. If you look at GM stock, technically it's quite enticing. The other day, I think around the beginning of April, the stock was trading at about $41. Right now, we are talking about $47, which is about 13.51%. So you can see, irrespective of the bill passing, the EV bill that affected the GMs, it's not really quite direct to GM, but whatever took the shock was Tesla, which we saw tank about 14%. Yeah.
All right, just before we get into your last pick, are you, with both GM and HP, are you just taking advantage of the rotation out of US stocks that we have been seeing? I mean, you mentioned, you know, when it comes to HP, you could perhaps be buying the dip.
Most likely, yes, I can say part of it. Yes, I'm taking advantage of that. But again, there are so many metrics that I use in terms of my stock pick.
All right, let's move over to your last pick, which is Alibaba. China's tech sector, you know, really making a comeback this year, Timothy, especially with the emergence of DeepSeek. Just share your analysis on Alibaba in particular and its place in the e-commerce sector.
Yeah, when you look at Alibaba, basically four things to consider. Number one, its intrinsic value, as well with the analyst sentiments. So when you look at the Alibaba company, it has a very low PE ratio relative to its growth prospect, and basically it's recommended as being the intrinsic value being higher than the market value, therefore providing a good peak. When you look at its fundamentals, we have quite a strong fundamentals for Alibaba, and this is whereby we are looking at the cloud computing segment, which is a major growth driver basically for Alibaba. When you look at the e-commerce platform, it continues to generate substantial cash flows supported by China's massive consumer market, and therefore its diversified revenue streams, including the digital payments and entertainment, puts it ahead of its competitors. When you look at it also in terms of the market sentiments, or what I may call maybe the hedge funds, because they usually give a clue in terms of what to look at, we see it has been frequently cited by many investment analyst as a top undervalued stock. Also, this is supported by its stock price to sales and also the price to book ratios, which are lower than those of its competitors. Also, lastly, when you look at it in terms of growth opportunities, we are seeing its expansion into international markets, particularly the Southeast Asia and also the Europe market, again offering significant growth potentials, and therefore it has also even begun investing in the AI and logistics, which further is likely to strengthen its competitive moat.
And picking Alibaba, would you say that you are upbeat about the future of the Chinese consumer?
Yeah, definitely. That's something that you cannot be able to ignore.
All right. Thank you so much for your time and sharing your analysis with us, Timothy. That was Timothy Kiarie from Scope Markets Africa.